finance via a preferential allotment of shares. Let's quickly talk about the US markets. They resumed trade on Friday after the Thanksgiving holiday. It was a risk-off session with all three benchmarks posting declines of close to 0.5%. But all three indices posted their biggest monthly gain since June this year. Volumes were lower as the markets ended the trading day early due to the holiday weekend. Treasuries on the 10-year yield rose to 1.76%, while crude prices fell after prospects of a production cut at next week's OPEC meeting grew more doubtful. All right, Asian markets have started the week on a positive note, though, with China's manufacturing sector PMI posting an unexpected bump up. Rosalind Chin is joining us live from the studios in Hong Kong. Good morning, Rosalind. It seems like it's going to be a positive start to the week.
It really does. As you mentioned, that PMI data which came in over the weekend showing that PMI for manufacturing increased to 50.2 versus estimates of 49.5. So that was a very pleasant surprise for many. The first expansion registered, in fact, since April. And that, of course, has buoyed many of the markets here in the region. We've got the MSCI Asia Pacific making gains of more than 0.5%. Hong Kong and Shanghai opened just a few moments ago, also trading higher from the start. The Hang Seng Index up by 0.38% and the Shanghai Composite up by just over 0.1%. We also saw non-manufacturing PMI also registering pretty good growth to 54.4. Now, don't forget, though, there are obviously still significant challenges. There are also still this US-China trade deal that is still pending, although, of course, hopes are increasing around that. So this may not be the start of a continued trend, but investors are pretty happy with what it's saying right now. In fact, in a few moments from now, we've got the China Caixin manufacturing numbers for November. Those are due at 9:45 Hong Kong time, and that could change the tone depending on what numbers come out of that. So we're also looking ahead to the US ISM data, and if that also surprises upwards as well, that is due later Monday, and then we could see a lot of celebrating on the markets a little bit later and also into Tuesday as well. So right now, though, green across the board. I just want to look at one more sector, which is the financials in Australia. The S&P ASX 200 is making gains of more than 0.5% right now, though. We're looking at banks like Westpac and also NAB, National Australia Bank, which have got new leaders at the helm today. The NAB Bank has this Ross McEwen, who came from RBS, and they're hoping that he's going to help NAB turn itself around. Whereas at Westpac, of course, we had Brian Hartzer, who resigned as CEO, and in the interim, the CFO, Peter King, is stepping up to helm the bank as the bank looks for a permanent replacement. So those two banks there trading a little bit higher for Westpac, up by more than 1%. NAB is up by about just under 1/3%. Elsewhere in the region, we've got Tokyo up pretty strongly, up by more than 1%. The Nikkei and the Topix up by about 0.9%. So overall, markets in the green at this point in the session, but we are waiting for more of those more manufacturing numbers to come out of China to see whether things remain that way. Back to you.
All right, thanks so much for that, Rosalind. Now, let's turn to what's making headlines across the globe. Paul Allens of Bloomberg News brings you the first word headlines.
Boris Johnson will paint the Conservative Party as a champion of law and order this week as London recovers from a terror attack that killed 2 people. The attack has cast a shadow over the election campaign and has thrust security into the spotlight as a debating topic. The Prime Minister says he's determined to tighten the law and blamed his opponents for previous legislative mistakes.
What I have said since coming to office in the last 3 or 4 months is that I think this whole system of automatic early release, which was brought in by Labour, and it was under that system.
You've been in power for 10 years.
It was under that system. I've only been in office for 120 days.
You can't keep people safe on the cheap. For far too long, our country's leaders have made the wrong calls on our security.
Dozens of people were injured in clashes in the southern Iraqi city of Najaf in protests against corruption at local and government level, as well as poor services and a lack of jobs. The clashes came as the Iraqi parliament approved the resignation of Prime Minister Adel Abdul Mahdi after 2 months of anti-government anger. More than 400 people have died since the protests began at the start of October. The German government faces crisis after its coalition partner elected a new leader seen as a threat to Chancellor Merkel. Her own choice to head the Social Democrats was soundly defeated by two politicians seen as fierce critics of the Christian Democrat-led government. They say they have no intention of toppling Merkel, but may issue policy demands that the Chancellor might find hard to accept. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
All right, let's look at how the markets are going to look at the start today. I'm joined by Agam Akil. He's going to tell you all about the trade setup for the day and also what's happening in the futures and options space. Good morning, Agam. Positive cues from Asia this morning because of positive data coming out of China.
Yeah.
How are we looking at the start for us?
Well, two big data points,
Yeah,
Alex.
exactly.
Of course, one is the GDP and the other one is, of course, mobile carriers hiking tariffs. And based on that, however, we're seeing a quiet opening as far as the SGX Nifty indications go. But let's talk about what's happened last Friday. And we did see some weakness in the Nifty, not as much in the broader market indices where stocks did do well, relatively better than the indices. And as far as the banking index goes or the indices go, well, we did see some weakness coming in. So a lot of the weakness was on account of, well, the declines in the financial sector. But how are ADRs doing right now? Weakness coming in there as well. Vedanta, Tata Motors, HDFC Bank, all of them declining in trade with not too much to speak for otherwise, say for something like an Infosys, which advanced by around 0.5%. But what about fund flows? So FII sold stock to the tune of around 1,892 odd crores on a net basis, and DI is buying stock worth 954 odd crores. Moving in, let's also talk about contributors, and we do have HDFC Bank, Bharti Infratel, and Bharti Airtel advancing. There's a likelihood that we very well may see some of these stocks advance today as well, along with Reliance Industries, considering a tariff hike from the industry. And of course, Reliance Industries was weighing down on the index last Friday, but that could change. But let's talk about futures and options. It was the first day of the new expiry last Friday. But what we really saw was unwinding coming through. This is a tad surprising here, longs unwinding. And in terms of the Nifty bank futures, again, unwinding worth 9%. Moving on, let's also talk about your open interest distribution. We're looking at 12,000 as the one with a substantial amount of support for now, but you never know, things may change. It's early days in the series. Moving on to, well, your open interest change, what we saw was a little more writing around the 12,100, 12,200, and 12,300 calls, and that also sets us up with some amount of resistance in the near term. In terms of your India VIX, well, that came up further below the mark of 14. The Nifty put-call ratio, of course, got revised after the expiry at around 1.5. And in terms of stocks, where we're keeping an eye on Adani Ports, PVR, Yes Bank was a surprising move there. Of course, Yes Bank along with Z Entertainment will remain in focus. Motherson Sumi saw some declines too. And in terms of unwinding, early days, I'm sure we won't have too many names, but Indiabulls Housing Finance, Union Bank, and L&T Finance Holding, among others, which have been in focus, seeing a lot of traction. And it's likely to be the same, Alex. It's going to be another mixed day of trade today.
Thanks so much for that, Agam. You know, one of the talking points that Agam mentioned with regard to the GDP number, the Indian economy slowed further in the July to September quarter. The second quarter GDP growth stood at 4.5%, which is the slowest in 26 quarters. And this is the sixth straight quarter of deceleration in the Indian economy. Ira Dugal takes us through the fine print of the numbers.
The Indian economy continued to slow for the sixth consecutive quarter. The number came in as expected, but that's not much to write home about because at 4.5% GDP growth, we're at the lowest levels since 2013. GVA growth fell to 4.3%. Perhaps the only thing you can take heart from is that 4.5% was in line with the high frequency indicators and was close to the consensus estimate put out by Economists, polled by Bloomberg as well. Apart from the real GDP growth, which tends to grab the basic headline headline, focus a little bit on the nominal growth number. Nominal growth accounts for price changes and inflation, and nominal GDP growth came in at 6.1%. It was already very low at 8% last quarter. It fell further to 6.1%. This appears to be the lowest in about a decade. GVA growth at 6.3% based on Bloomberg data suggests that this is the lowest since 2002. Nominal GDP growth matters for companies whose earnings closely linked to nominal GDP growth, and that's why we are worried about the nominal GDP growth number. It also has a bearing on government finances because it means that the deficit number will look higher if your nominal GDP is lower than the 11 to 12% budgeted by the government. There is one aspect, a slightly technical aspect, which worth keeping in mind, and that's the deflators. The deflators are used to derive real GDP from nominal GDP, and the deflators are actually lower this time around because they link up to wholesale price inflation, which has been low in this quarter. So that would mean that your real number would perhaps look a little bit better because of that lower wholesale price inflation. Let's go back to the sectoral trends within the GDP number, and you'll see that you've got a weak number in industry as expected at a negative 0.5%, but again not as bad as some had feared. Some economists were suggesting it could be as low as 2% contraction. Not that bad, but still worrying given the slide that you've seen in growth in the industry. Agriculture was flat, as was services. So the industry component with sectors like construction, manufacturing, etc., continues to be a point of worry. If you look at some of the other aspects of the GDP number, it's always the expenditure side data which gets a lot of attention. Last quarter, we had seen a fall in personal consumption growth to 3.13%, and that had raised alarm bells about the consumption story in India. Well, you got a bit of a pickup this time around to 5%, but again, that's nothing to write home about, because if you look back a few quarters, you've been ranging at about 7 to 8% growth in personal consumption. So at 5%, it's still a little bit weak, but perhaps better than the first quarter of the year. The other notable point is the 15% increase in government consumption shows that government spending picked up in a big way in the second quarter after the elections were done, and that supported the economy. Gross fixed capital formation, after a period where you were seeing some pickup, has been sliding and came off to 1% this time around as well. The question that you're now left with is what is the policy mix to correct this 4.5% GDP growth and the 6-quarter decline? Well, it does look like the heavy lifting will continue to be done by monetary policy. This is despite the fact that inflation has actually picked up to above the midpoint of the Monetary Policy Committee's 4 plus minus 2% range, but they will probably look through that because that's largely coming in from a handful of vegetable prices and focus on core inflation, which has been very weak, along with focusing on GDP growth, which, like we said, at 4.5% is the lowest since 2013.
All right, let's also listen in to what economists are making of the GDP print and what more the government can do to revive growth in the economy.
Given the favorable base effect, etc., which we enjoy at this moment, going ahead next few quarters, the numbers might actually look slightly better, but we really need to have a close tab on this particular number, because at this moment, given the kind of negative sentiment that is prevailing in the economy, big tailwind from the investment sector may not really be the case. So we will remain very, very dependent on some bit of government spending and some bit of revival in the consumption segment. To some extent, that's happening, but we really need to remain. We need to watch this very, very closely in the next few quarters.
My belief is that the government will try hard to meet the fiscal deficit target, which will give some stability to the bond market. And therefore, if RBI continues to cut rates, there would be transmission, given that RBI will also keep liquidity flush in the system. So I guess this cycle we need to depend more on monetary policy. Fiscal policy also, remember that it's not like you do some stimulus, tomorrow you'll see growth going back. It takes a lot of time for growth to kind of come back if you're doing a big infrastructure project or if you're going down that line. Consumption, obviously government can try to spend more than what it has budgeted, but that can have negative consequences from other sources like rupee, or if you see foreign investors pulling out money from India, there could be other issues. So my take would be that you solve the NBFC sector problem on an urgent basis, let RBI continue cutting rates and keep liquidity flush in the system, and at the same time you maintain the fiscal prudence, which over a period of time will do better for the economy, and you'd see growth coming back to 6% handle, at least if not 7% over the next 3-4 quarters?
I think there has been a very strong revealed preference for the government to front load spending. If you just look at where the government consumption numbers are, so in a way they are running a counter-cyclical fiscal policy support for the last 3-4 months. In fact, the numbers that came out earlier today for the month of October, you can again see government spending being relatively high. And so there is this front loading of expenditure going on. Now, the clear question, as Kaushik rightly said, is that if in an environment where there is nominal growth slowing down, you have fiscal pressures, you have funding pressures, how do you, then come out of this situation where you're managing the rating agencies and you're trying to manage a slowdown? Our sense is the revealed preference is fairly strongly towards reviving growth. I think ultimately, as a friend of mine said, growth does solve a lot of issues in some sense, and so I think the focus seems to be right now on addressing the growth problem more than the sustainability issue.
We've had very conservative and tight fiscal as well as monetary policy ever since 2011, I think, after we had the double deficit problem and so on. So I think that they are going to make sure that the increase in the deficit is not more than this 0.5. They're aggressively pursuing privatization, other ways of raising revenue, finding slack in the system, etc. So therefore, I think then what is happening internationally is that the bond market vigilantes have suddenly reversed. Now they're all saying that the central bank stimulus is not adequate, the world is slow, global growth is slowing, and governments can borrow at such low rates. They should borrow and there should be more fiscal spending. The debt which, say, the advanced economies have, US and so on, is many times what our debt. And we have higher, when people say we're still growing at 4.5%, still positive growth, most advanced economies won't grow at even 2 or 3% if they're lucky. So then what happens is the denominator rises, the deficit ratio falls. That is why the government preponing spending and maintaining, especially capital spending or productive spending, is so important. Because we are seeing in the figures that the only thing that's supporting growth really is public administration and so on, right?
Right.
So they can't afford to sort of stop spending over the next quarter in order to meet some artificial fiscal deficit.
All right, so that's going to be one of the major talking points. The other major talking point is a change in the telecom industry. The price war among telecom operators seems to be easing. Airtel and Vodafone Idea unveiled new and costlier prepaid plans on Sunday, with Reliance Jio announcing a tentative tariff hike of as much as 40%. Somit Sarkar is here with a snapshot of what's on offer. Somit, good morning. What are the changes that are in the offing?
Good morning, Alex. So they have changed the prices across the board. Now, if you see for Vodafone Idea and Bharti Airtel, they have hiked the tariffs in the range of around 15 to 50% across various plans. Now, the data allowed remains the same except for one plan in both the companies. Now, the company will have also allowing only a limited number of minutes for outgoing calls, and post that the company will charge nearly 6 paise per minute, something similar to what Jio had done earlier. Now, both the companies are now offering plans at similar price points, that is Bharti Airtel and Vodafone Idea. Now, along with this, Reliance Jio also came out with an announcement late evening saying that there could be a tentative hike in tariffs of up to 40%. They haven't given any details on the same, but they're saying that with this tariff hike, there would be also additional benefits of nearly 300 additional benefits, which will be nearly 300% more than what they are providing now. Now, the details for this will be released on December 5th or December 6th. Now, for Bharti Airtel and Vodafone Idea, the tariffs will be applicable from December 3rd, and for Reliance Jio, the tariffs will be applicable from December 6th. Now, this price hike announcement of all three players will elude the concerns of a likely customer change. However, due to this announced price hike, customers might now look to shift to lower plans. Now, Credit Suisse says that they are expecting further tariff hikes over the next 12 to 18 months as they're factoring in a 55% higher ARPUs by FY22 compared to the September 2019 level. Now, MK says that the quantum of tariff hike is higher than expected, and it also comes with a plan to restrict down trading. Goldman Sachs also says that the tariff hike is significantly higher than what they were expecting, and this positive for the telecom companies going forward.
Thanks so much for that. Certainly, stocks that you have to watch out for in trade today. But another stock that you have to watch out for in trade today is going to be Yes Bank. We've spoken about it quite a bit. The private lender decided to raise up to $2 billion via preferential issue to a clutch of investors. A large chunk of this will come from family offices. Vishwanath Nair, who's been tracking this closely, is joining us on the phone line for more details. Good morning, Vishy. We're talking about $2 billion. Who are the investors? I think that's the key question.
Good morning, Alex. So yes, $2 billion worth of investment into Yes Bank, which is likely to help the bank boost its capital adequacy and help in providing for some of the bad loans that have been accumulating on the bank's book. There are two sets of investors. One is institutional investors and the other is the family office group of investors. So let's tackle the second one first, which is the family office account, because that is where most of the funding is coming from. $1.2 billion coming in, or at least an offer of $1.2 billion coming in from Irwin Singh Bridge and SPGP Holdings. It's a consortium of these two investors. Now, the conversation is pursuant to what the bank had originally announced in October, where it said that it had received a binding offer for this amount from a group of investors. They had not specified who these investors are. Now we have some clarity. Irwin Singh Bridge is a Canadian high net worth individual, while SPGP Holdings is a Hong Kong-based investment firm. These two put together about $1.2 billion. The next large amount is coming in from the Tax Holdings, which is based in Singapore. They are investing about $500 million. And there are the other family offices such as Aditya Birla Family Office, GMR Group and Associates, as well as Rekha Jhunjhunwala, who is Rakesh Jhunjhunwala's wife. All of them also investing some amount of money. Among the institutional investors, you have a top-tier US-based fund house, which is investing about $120 million. There's Discovery Capital and Ward Ferry, both investing some amount of money into the bank. All put together, apart from Irwin Singh Bridge and SPGP Holdings, all of the other investors put together about $800 million. So the total amount comes to about $2 billion. Now, none of these investors, remember, have yet to receive an approval from the Reserve Bank of India, which is important because the bank will end up diluting considerable amount of stake in favor of these investors. So you will need an RBI approval. Remember, the RBI approval is needed for anything above 5%. Typically, the RBI allows you to invest one single investor to take up about 10% stake in a bank. But looking at the amount of money that Irwin Singh Bridge and SPGP Holdings are proposing, that would lead to about 30% worth of equity stake that goes into the bank. So that is an important sort of movement. So unless the RBI approval comes in, the board can't proceed with this investment proposal, which is why they've said that on the 10th of December, the board will meet again and decide how much equity stake needs to be distributed among these investors.
All right, thanks so much for that update, Vishy. We'll be sticking with that story, of course, over the course of the next few days to find out what really plays out. Meanwhile, let's go to Somit Sarkar, who's back to tell you all about the stocks in news. Somit, what's on your list today?
Firstly, I'll start off with RBL Bank, which has announced a fundraising of nearly 825 crore rupees via preferential allotment of equity shares to investors, which include Bajaj Finance, Bridge Capital, FEG Mauritius, and others. DHFL, where RBI has filed for insolvency proceedings against the company. Adani and GMR Group will also remain in focus because Zurich Airport has outbid Adani Group and GMR Consortium to develop the Jawhar Airport in India. Sorry. In auto sales, Maruti Suzuki would be in focus because the total sales were down nearly 2% compared to last year. M&M, where the November sales were down nearly 9%. Mahindra Tractors sales were down nearly 19% compared to last year, while for Tata Motors, the sales were down nearly 25% compared to last year. Adani Ports will also remain in focus on the back of the Bull deal, where New World Fund has sold nearly 1.7 crore shares at a 0.5% stake. And lastly, on the primary market, Ujjivan Small Finance Bank, where the issue where they have given the details on the pricing, which is nearly rupees 36 to 37, and they have also finalized allocation of 8.21 crore shares to anchor investors at a price of 37 rupees per share. And the key anchor investors include Government of Singapore, CX Partner Fund, and Goldman Sachs.
Thanks so much for that, Somit. Now, clearly, lots to talk about over the course of the day, but let me tell you about a couple of stories that you'll find on the website, BloombergQuint.com, apart from what we've spoken about already. Maharashtra Governor Bhagat Singh Koshyari said yesterday that the Mahavikas Aghadi government is concerned about unemployment and it will enact a law to ensure 80% reservation in private sector jobs for locals. Koshyari made the announcement while addressing the joint sitting of the state legislature at the Vidhan Bhavan, in which he laid out the government's broad agenda for the coming years. And the Airports Authority of India has recommended privatization of 6 airports at Amritsar, Varanasi, Bhubaneswar, Indore, Raipur and Tiruchirappalli. That's according to a senior government official. All right, that's all you need to know going to trade today, but do stay tuned. Like I said, there's a lot to talk about. This is BloombergQuint.